Contract for difference is an agreement between two parties in which the losing party pays to the winning party the opening and closing price difference of an underlying asset when the contract is closed out. With CFD, leverage is possible, whereby a small variation in price can generate enormous profits or losses with just a small initial margin. Besides that, in CFD, investors shall buy or go long when the prices are believed to rise, and sell or go short when the prices are believed to fall. However, there are a few risks associated with the CFD, such as counterparty risk, market risk, as well as liquidity risk. The first underlying asset chosen is commodity, whereby gold is traded. This is because commodity investment is believed to provide security to a portfolio. An upward trend occurs when each successive peak and trough are above the earlier ones. The traders are able to make profits when they enter to buy an asset during an upward trend, and whenever the peak is expected to be the highest and can no longer rise further, a reverse trend will occur. Based on the support and resistance technique, it is suggested to buy an asset during support and sell during resistance. It is seen in this graph that there is an upward trend, and as a support area which is drawn in red line is identified in the gold market, a long position is taken in this trade to buy the gold at 12:45 p.m. and it is sold at 3:29 p.m. when the gold price rises, and it is expected to fail in having a higher peak as there is already a large increase in the price. This is proven as a resistance area appears after closing the trade at 3:29 p.m. The second underlying asset discussed is foreign exchange, or also known as Forex, whereby GBP against USD is traded. Based on the graph, the GBP against USD market was trading at a downtrend in the beginning of 16 May. However, the trend reverses at 9:45 a.m., whereby it starts to form an uptrend. As long traders are searching for prices that are trading above the moving average, which is in blue line, traders will not enter the market at 9:45 a.m. as the foreign exchange rate are trading below the moving average. Therefore, as soon as the moving average cuts across from above the candlestick at 12:15 p.m. and shifts below of the candlestick, it indicates that traders should enter the market, and thus a long position is taken at 12:33 p.m. when the exchange rate is at 1.35077, whereby the trend line is expected to rise. The trade is then closed as the exchange rate has achieved a new intraday high and to avoid the reversal of trend. The third underlying asset chosen is shares, whereby China Construction Bank shares are traded. Looking at the graph, it can be seen that there is a clear uptrend starting from 1:48 p.m. on 18 May, after the CCB share market experienced a downtrend and sideways trend before that. As the price reaches its new peak at 8.23, the price is expected to fall. This is because a steep uptrend of the support area, as indicated in red line, will lead to higher competition and attract more buyers, and it is likely to followed by a significant resistance level. As seen in this trade, since the price reaches at the highest peak at 3:12 p.m. after going through a steep upward trend, it is expected to reverse and face a strong resistance level. Therefore, a short position is taken at 3:13 p.m. with the rate of 8.19. Although the fall is found to be less significant than predicted, the price is still expected to fall over time, hence the trade is left ongoing. The last underlying asset discussed is index, whereby the Japan 225 index is traded. Looking at the graph, the Japan 225 index is trading in an uptrend since the beginning of 21st May. As moving average in blue line enables traders to spot for support and resistance, the support area, which is in red line, is noticeable as the moving average is moving upward in line with the higher lows of the support. And after it is believed to arrive at the highest support, a resistance will occur. Therefore, a short position is taken at 10:52 a.m. with an expectation that the price will fall. As a conclusion, to be able to successfully trade an underlying asset, be it commodity, forex, indexes, ETF, or shares, a successful trading strategy is very important. There may be so many indicators to help identify a trend, however, there is no single indicator that can perfectly guarantee a profit. Therefore, apart from analyzing the market trends, a trading strategy should be carefully designed based on own goal requirement and risk interest, as everyone has different risk appetite and profit expectation.